Hi and welcome to Swissquote's Daily Market Talk. It's Monday, December 20th. Mr. Trump will be sworn in today and officially become the 47th President of the United States, bringing with him hopes of growth and deregulation, but also concerns over inflation, exploding debt, and rising international trade tensions. So fasten your seatbelts, ladies and gentlemen. Trump 2.0 is officially kicking off. So after a few weeks of hesitation around the beginning of the new year, the equity bulls finally returned to the marketplace last week on the back of a set of slower than expected inflation figures from both the US and the United Kingdom, and also a set of stronger than expected big bank results in the US. So the global bond yields also retreated during the course of last week in the developed world from a peak reached earlier last week in many of these locations, and let the equities take a breather as well. So the US equity indices actually posted their best weekly performance since the post-election rally in the US of last year, and the non-technology sectors performed better than their technology peers. But note that both Nasdaq 100 and the S&P 500 managed to close last week above the downtrending channel top building since mid-December last year, while the Dow Jones Industrial Index recovered half of the losses that it had accumulated after hitting a record high level back in December last year. That was December 5th to be precise. And the more cyclical Stoxx 600 stocks gained around 2.40% during the course of last week, a bit less than their US peers, while the FTSE 100 index in the UK rallied more than 3% to an all-time high level. In the FX space, the US dollar retreated last week on the back of the softer than expected CPI numbers from the US and the softening Fed expectations as a result of it, leading to a slowdown of the sell-off in the euro dollar and cable as well. The euro is trying to hang on to the 103 level this morning, while cable is slowly drilling past the 1.22 level at the time I'm talking here this morning. The dollar yen, on the other hand, starts the new week in favor of the Japanese yen, as around 3 analysts in 4 expect the Bank of Japan to announce a rate hike this Friday, with the hope that their action won't send a shockwave across the global financial markets, as it had been the case in summer 2023. Remember that. And also on hope that Donald Trump's international policies won't have a dramatic impact on the Japanese fundamentals. So, speaking of that, Donald Trump clearly stole the spotlight from the actual President Joe Biden even before he was elected president, and Joe Biden was completely wiped out from the headlines since then. But it's today that Donald Trump will be sworn in and officially move into the White House. Now, a good part of Donald Trump trade has already happened. It has already been priced in and out. The small and mid caps rallied, energy and financials outperformed, and cryptocurrencies touched the sky. Therefore, I actually believe that the first week under Donald Trump may, and I say may, not bring a lot of surprises or things that we didn't know or we didn't expect before. Hence, we may not see major market jolts, but we may see as well. Who knows? Because Wall Street Journal says that Donald Trump has already prepared 100 executive orders to take swift action after today's inauguration, including in order to make cryptocurrency a policy priority and giving insiders of the cryptocurrency market a good voice within his new administration. And if you haven't heard just yet, Trump has a cryptocurrency now of his own that he launched a couple of days ago on the Solana's blockchain. And the Trump coin gained up to 600% in the first 3 days of trading, reaching $15 billion of capitalization before easing just a little bit, briefly sending the Solana to a fresh record high as well. Well, beyond all that optimism, Trump policies are expected to be a double-edged sword mind you. His pro-growth policies and deregulation are obviously expected to benefit to the US economy and to the economic tissue, but his tariff policies could actually lead to higher inflation and soften the Federal Reserve those hands for easing the monetary policy. And in addition to that, the exploding debt levels in the US could further push the borrowing costs higher. And note that the world's leading bond investors like Nomura and T. Rowe Price, well, they expect the US 10-year yield to advance toward the 6% mark. So that would be an almost 140 basis point rise from the actual levels in the US 10-year yield. But anyway, the week kicks off on a positive note in Asia. TikTok is back and running in the US after a short blackout during this weekend. Now, Donald Trump wants to extend the deadline for the company to find US partners to continue running the popular social media platform in the US. And Trump optimism goes beyond TikTok, obviously, and beyond cryptocurrencies, because he and Xi Jinping held a very good phone call to make the world more peaceful and safe, whatever that means. But the Chinese CSI 300 index is up this morning, although the People's Bank of China kept its lending rates unchanged today for the third straight month to contain the downside pressure that we have been seeing on the Chinese yuan. And the 10-year yield is trying hard to push higher, but still under some pressure. Now, many influential names will be attending Trump's inauguration today, but Nvidia's Jensen Huang will reportedly not be among them. He will rather celebrate the Chinese New Year with his family and his employees, which actually sounds a bit odd to me, as the Chinese New Year is on January 29th this year, and no CEO who values good relations with the White House today would miss that for anything in the world. But hey, maybe I'm just overthinking about it. Maybe Jensen Huang really doesn't want to be there and prefers celebrating Chinese New Year. But Nvidia is trading a few points below its all-time high levels despite earlier reports last week about further chip curbs to China and delays in its chip deliveries to some clients, and also some clients cutting orders. Now, Huang looks like he is quite confident in his numbers this quarter around as well, and mind-blowing numbers have obviously been the lifeblood of Nvidia bulls over the past 2 years. But Nvidia is not due to report its earnings until end of February, unfortunately, so we will be watching other companies around the world revealing their own quarterly results until then. So this week, big names including Netflix, P&G, and American Express will be going to the earnings confessional. Now remember, the S&P 500 companies are expected to print an almost 12% earnings growth in the fourth quarter of last year. And if you pull the Magnificent Seven stocks out of this equation, the earnings growth for the S&P 500 companies are expected to be around 4%, which is not bad at all. And good earnings and also prospects of further interest rate cuts in the US and elsewhere, though slower, could give support to equity valuations around the world. In the energy space, well, crude oil's 20% rally since December 10th saw strong resistance last week above the $80 per barrel level, and the 6-week ceasefire deal in Gaza actually helps easing the price pressures in the barrel of US crude this Monday again. But note that the geopolitical risks prevail right now, with Donald Trump aiming to go after the Russian oil giants, Iran, and also Venezuela. And the IEA now expects a lower output surplus this year, and the latter should give support to oil prices in the coming months. So minor support is seen right now near the $77.30 per barrel level, which is the minor 23.6% Fibonacci retracement on the latest price rebound. And the major support stands near the $75.30, $75.40 per barrel region that shelters the major 38.2% Fibonacci retracement and the 200-day moving average. So this is all for today. I'm İpek Özkardeşkaya and thank you for joining me and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, and on LinkedIn for regular market updates. Subscribe to our YouTube channel for daily market comments. And please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow. And until then, good day trading.